hearing this, it's good morning. But understand, it is actually 8:42 at night. I'm recording this one because I am going to be busy all day tomorrow. So I figured I'd give you a little podcast with some thoughts. I've got a lot going on here. I've got a Home Depot play that I told you about last week that actually came through with a nice 12% gain. I've got one that's currently going on, so you might be able to take advantage of it in a very similar way. Trading Desk and Carnival. We can talk about that. I've got 3 alpha picks for you that if you wanted to buy them, I will name the stocks, 3 of them, if I want to buy them today and why. And one, I was researching, I got a bonus one for you. So that one's good. Apple. It's joining the party. We're going to go over SoFi, App Lovin'. Robinhood just took off. We'll go over some crypto stuff with a play. And then I'm going to give you a couple of trades. One that was up 63% in 1 month. And then we're going to go over the scans, and I'll put out a couple of bonus things for you. So listen to the end. But we went up again yesterday. Okay, the 2 candles, you can see them right here. The morning candle, this is the 4-hour algorithm. The morning candle was down 0.15. We opened up at 551. We closed at 550. So it was kind of flat, nothing big. And then the afternoon took off a little bit. You opened at 550, you closed at 551. So again, opened at 550, closed at 551. You're up 0.63. It was a good day. And one of the things I like to do on a good day is go to FinViz. This is free. This should be bookmarked in your website. And every night you should do this. Go and look at the top performers of the day and see if something stands out to you. Boy, what stands out to me? Look at the top 5. Technology, 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 technology. Number 9, technology. Number 11, technology. Okay, I went over last week how momentum and social, the ETF buzz were good. If you didn't hear that one, again, it's Fridays. This was yesterday's, but this is Fridays, 8 hot trades. So again, that's the newsletter. The good part about subscribing to the newsletter is not only do you get these ideas, but you also get entered to win TrendSpider, and you not only get the lower end TrendSpider, we're not giving away the lower one. We're giving away the high one, okay, the advanced tier. And why do you want the advanced tier? So you first want to enter to win by just signing up for the newsletter. If you are subscribed by July 4th, we're holding the drawing on July 4th. We're giving away the advanced tier. And I go over it many, many times. But the reason, if it's within your budget to get the advanced tier, is those 52 trainings per year. That's once a week at $107. Okay? Just a little bit over $26 per training session. And you get the tool for free. Okay, this is the Mac Daddy of everything. I wish they had these training sessions when I first started, because if you are going to learn not only a new software, a way of trading and technicals, we'll go over everything. But again, if you were to do that, it is a Herculean task. But if you've got a Zoom meeting once a week with a product expert, think of it like learning golf, like learning tennis. Okay, like learning piano. You are being taught to do this, and you can ask any questions that you want. And that's $107 a month. It's a 50% off savings. 50% off. That's 50% off the annual plan. When you sign up for the annual plan, not only do you get the great tool, but you get my 4-hour algorithm. Watch as I show you a master at hand. Okay? We went over the seasonality of QQQ. Okay, the last 15 years of QQQ. The next 2 weeks are huge. So this week that we're on right now, the 27th week of the year, the mean change 1.13. You win 69% of the time. So seasonally, it's a great week. And FYI, every year, July 4th usually shows up in these 2 weeks. It's not like July 4th holiday isn't part of these every year. Every year, the July 4th holiday is part of this. You don't always have the tweets that may happen. But again, I bought into TQQQ. Why? Because it's got the same profile as QQQ. It's just triple levered. Now, I'm not up huge on this buy. If I were in at 78, that would be a great buy. But I'm in at around 82. So, and I didn't go big. I will start adding to it if it takes off. Okay, I will add to my winner. But this is a 2-week trade. This at maximum will be a 2-week trade. I very well may get out of this within 1 week. You have to journal your trades. And this is a technical trade. This isn't based on valuation. This isn't based on earnings. This isn't based on anything. It is seasonality and it is the candlesticks. We have confirmation. Okay? The people who are currently sitting out this market because World War III started, this is a clip from The Sopranos. Again, I sold Monday morning after the U.S. bombed Iran. We're up since then. Again, the charts tell a story. And so we're up since bombing Iran and World War III didn't take the market down. So everybody's laughing at you if you sold because World War III was coming out. I went over yesterday how buy and hold is the winner. And it doesn't matter when you buy and hold, but long-term buy and hold is the winner. But there are a couple of ways that you can make money in this kind of market too. Okay, Home Depot. I brought this up last week. Last week I brought this up. Home Depot was supposed to bid against, it was against QXO Logistics, QXO. QXO made a bid for $95 last week for GMS. Well, Home Depot says, hold my beer, and they bid $110. So clearly, when I brought this up last week, and it was the Wall Street Journal that reported this. This isn't anything other than the Wall Street Journal saying, hey, this one might be a buy. And last week I brought it up, and you can see you had confirmation above that 9-day. Yes, you were filling this gap. Yes, it was a risk reward. But you knew at $95, if Home Depot was going to bid on it, it was going to have to be a bigger bid. So if you took the risk, maybe you got a 12% upside. Because again, GMS was up 12% yesterday. Home Depot down. And that was a play from last week. But you say, hey, last week doesn't help me. You want one from today? CORZ. Okay? Core Scientific. Stock Talk, who is phenomenally well. I mean, I think his portfolio is up like 193%. Great trader. Trades small caps. And he even asked, Dirk Kamazuri asked, hey, what's your favorite of all of these? And Stock Talk says, everything I'm buying and selling is disclosed in my community. I can't share it with the 300,000 followers because it would put his trades at quickly becoming overcrowded. So he can't tell you. I'm telling you what I do, but I'm not in these small caps, okay? But this, if this comes true, Core Scientific surges as CoreWeave pursues possible acquisition report. CORZ, it surged more than 20%. It was up another 2% yesterday. This is a small cap. CORZ has a market cap of $4 billion. It has a short interest of 15%. It is a hold in the quant. Wall Street, 17 analysts have it as a strong buy with an $18 price target. And if they are getting bought, understand it's got to be more than the market is currently paying. So there's an idea for you. And again, that was brought up by Stock Talk. I looked at this. This particular article was last week. I'm not a small cap guy. Okay? But there were a couple of them that I got right over the past couple of days. Okay? First one is the trading desk. Trading desk was up 4%. I said yesterday that as this one comes back up, okay? We talked about this yesterday. As this one comes back up, we got the buy-in 4-hour algorithm right here at 71.25. It wins 58% of the time, 24 positions over 24 months. So more than likely, if you get into this gap, you might fill it. Now, the quant says it's a sell. this would be a trade. This would simply be a trade, not on fundamentals because the valuation is hard. It is horrible. It's at risk of performing badly. And you can look at it. Competitors, Google and Amazon and Meta. I own all of them. So I own all of them. Again, go and read the AI report. But Trading Desk was up. You want to know what else was up? Carnival. Talked about it last week as well. Carnival before earnings, classic buy. And it remains a strong buy. Now, you can get all of these quant ratings. You can get everything that I've gone over. I'm going to currently give you 3 Alpha Pick stocks. And you might say, well, what's Alpha Picks? Well, it's part of this bundle, okay? Getting the quant, getting all of these ratings, it's part of the Seeking Alpha bundle, which is on sale until Friday. Once Friday's up, don't come at me and say, I'm not saving the same amount of money, because you save up to $160. There are 2 platforms here. Okay, the first is Seeking Alpha Premium, which is you do the research and you do all of this research. Okay, the second part of this is Alpha Picks. If you just want them separately, again, on the link tree, the third link is Seeking Alpha Premium. You can get a free 7-day trial. And it's a good one. Again, what do you get? You get AI-powered virtual analyst report, custom stock and ETF screeners, Seeking Alpha quant rating, and unlimited content. You can read everything you want to know about your stock. But the second part of this is Alpha Picks. This is a portfolio that has tripled. I think it's tripled as of today. The S&P since inception. It is a pick on the 1st and the 15th of each month. You get one tomorrow. Tomorrow at noon, you get a new pick. So subscribe to the bundle and you get that pick at noontime. Okay, if you miss it, you get the full portfolio on day 1. So you can go and buy it. You have to set this up. If you want to know how to do it, I will include a link to a YouTube video where I bought over $100,000. I have $120,000, $130,000 in this portfolio myself, and it is outperforming. Again, it has outperformed since April. So what I'm going to do today is give you 3 stocks that are currently strong buys in the quant and part of this Alpha Picks portfolio that I would be buying today. Okay. First one, Carnival Cruise. It was up 3% yesterday. We just went over this. It was up 3%. It's a strong buy in the quant. Go and do your research on whatever tool you have. If it's Seeking Alpha, go and do your research. But this is part of the Alpha Picks portfolio. So if you just signed up for Alpha Picks, you get the nice analysis of it that's in Alpha Picks, but you don't get the quant rating or any of that sort of things with the AI analyst. That's part of the bundle. But in Alpha Picks, I would be buying this today. Alpha Picks picked it in November 2024. It's returned 28%. While trading this one, and again, go to the 4-hour algorithm on TrendSpider. Trading this one just in the 4-hour algorithm since April, you've returned 58% with 2 trades. Well, even more. Let's move this one up because that was just of today. That's 65% since April. Okay, just trading this one stock as part of Alpha Picks. So if you had TrendSpider and you had Alpha Picks, maybe this is one that you buy on the dip. A second one that I will go over that is a buy is ATGE. This is Adtalem Global Education. Reason why I would buy it? Could be setting up for a bigger move. Could be pushing to all-time highs. We have confirmation. The buy right there at 122. It's 10% below its Wall Street target. Okay, and you look at a weekly chart of this, it has run. Could it be going higher? You might have said back here in September at $74, well, the MACD's stretched, the RSI is too high, can't go higher. Well, just put in a little platform, and we just saw a little platform right here. The all-time high, 140. Where are you trading right now? 127. That would be a good move. And a third one that I would buy today that has returned quite a bit to the portfolio is T-Mobile. And you can see, I think this was where it was bought. We've broken that trend line. But again, I would say this one just got to buy. 227. Where are you trading it today? 238. Are we gaining back that trend line, that long-term trend line? It's the middle of the 52-week range, 13% below Wall Street's target. And they have earnings coming up July 16th. Again, it's probably a pretty good play. And then I'll give you a bonus because I was researching, okay? I just went over here and I went to EAT, which is Brinker. Okay, this is an alpha pick. It's a bonus one. It's a strong buy in the quant. And I said, do I want to include this in the 3 that I would currently buy? And I would say no. And the reason I would say no is because it's at the top end of its 52-week range. Your all-time high is 192. Wall Street says that it's worth 170, which is 5% downside. But again, going to Seeking Alpha Premium, I saw this top article that was just in June 13th. Okay. And they mention EAT. And I said, oh, where did they mention it? Another name in the fast casual that has been crushing is Robin Gourmet Burgers, Red Robin. Now, if you don't know, they have endless fries. It's a fantastic place to eat. I would love to do it. But this is an article which restaurant chains could be taken over. Red Robin, many years of sales and comps pressures. This one is a pretty good competitor to Brinker's Eat Fast Casual offerings. Now, if you go and look at Red Robin, this is unlike Eat Brinker, it's in the middle of its 52-week range. It's a strong buy from Wall Street, not a hold. Still has 70% upside. 70% upside to its Wall Street price target, and it's a strong buy in the quant. Analyze it with AI, and the virtual analyst report was just done on 6/6. Okay, there's its competitors. You can see Brinker and Dine Brands. Valuation attractively priced. Growth shows promising growth. Profitability a challenge with a gross profit margin of 13%. Little problem. Momentum, stock momentum is exceptional with 9-month price up 86%. The sector's only down 7%. Revisions, they're positive. 4 upward revisions in the last 3 months. No downward. And you can read about the positives and negatives. So Red Robin, let's go over to TrendSpider and let's see, is Red Robin part of this one? And again, remember I went over the Home Depot one and the CoreWeave one. If this is a takeover, they're going to trade more. It's going to pay more. But the 4-hour algorithm actually does pretty good. If you bought and held this one for the last 24 months, you're down 57%. Meanwhile, trading it in the 4-hour algorithm, you're up 5%. In a bull market, normally, I would say there's no way you want to buy this one. No way. But on a rebound for a takeover, this one might get it to its 200-day right there, which is $9.70. And it's gotten there a couple of times. And you're trading over the 50-day. Now, the last couple of times it got over the 50-day right here and right here, it didn't hold it. But I would say that's a pretty good risk reward for me. And that was just researching EAT. Again, the rabbit holes that you can go down is a great thing with Seeking Alpha. Now, I want to bring up the president and what kind of went on. Okay? Because this is the Kobeshi ladder. We now have a president who is actively calling for interest rates to be cut as low as 1%. He is actively stating that he will be replacing Chairman Powell with someone who will immediately cut rates. Remember, Powell is done. He could replace him in January, or Powell could step down. Meanwhile, stocks are at all-time highs, real estate prices are at all-time highs, US debt at all-time highs, and crypto at all-time highs. If the new Fed chair actually cuts rates to 1%, we're going to witness perhaps the greatest bull run of all time in stocks and real estate. There has never been a time in history when the Fed has cut rates to 1% with the stock market and home prices at all-time highs. It's always been done. Basically, to counterfactual, the market's been broken when you've gotten to 1%. But Trump is saying 1%. In May 2026, Chair Powell's term will officially end. If rates are truly going to 1%, everything right now is cheap. Again, to the Bob story yesterday, buying at all-time highs. If this is true, it's cheap. And then what did you have after that one was spread? You had a handwritten freaking note from President Trump to Jerome Powell. It's calling him, "You're too late. You're too late. You should be here." These are the different countries' interest rates. He wants us in Japan, which has been in a recession, in Cambodia, which has no currency, which is in Switzerland, which again is part of the EU. Maybe it's doing well. I don't know. But he's basically saying that this is not a man who wants to cut spending. This is a man who wants interest rates to go low so that he can spend more. That's what the current bill is. So the cut to 1%, you are going to see the greatest bull run in history. But as we've seen before, if you start doing that, rich people like me will be able to pay for things. It will expand the wealth gap, and then you're going to see inflation rise. Okay? It's just a simple economics. So you would sell the news once it starts turning. So make sure you've got access to charts because you want to know when to sell. If it goes to 1%, you don't want to be holding the bag when you get a 30% down day and some of the control stops come in. Now, Apple finally joined the party. And why? Because they're considering OpenAI and Anthropic to power Siri. Okay, it was up 2%. It's not a rally. Apple is not in a rally. And I say it again, Apple is not in a rally. But I would say at $200, it's not a bad buy. If they get Siri and AI right, and they get it on the iPhone, then you've got an opportunity for an iPhone super upgrade cycle. So if you get that right, this stock will take off. And what they're saying is switching to an outside provider for AI could indicate Apple is having trouble developing its own generative AI technology. It could be, but again, they have money. Now, Apple, it's a hold in the quant. The numbers just don't look good. It really doesn't look good. Wall Street, it's holding its price target. It's brought it down a little bit, but it's still 11% upside from where it is now. I am holding this one. I am not actively buying, but I've got a major position. For me, if I didn't have a position in Apple, I might just buy the Qs. I don't know that today I would absolutely go into this one. The only quant rating of the 5 quant ratings, the profitability is fantastic. But don't put it past them to come out with something and to do something. Again, they are the one Mag 7 that has the reason the Dow isn't at all-time highs, while the NASDAQ and the S&P are. The Dow is a market-weighted index, and Apple is its largest market weight. That's the reason it's not at all-time highs. Now let's go into financials a little bit, okay? Because SoFi has absolutely been crazy. You're cashing in. Again, if you bought back in April at $8, you're at $17. Let's look at where the 4-hour algorithm got us in. Because the 4-hour algorithm got you in here at 10, nice 17% gain. You started flattening out there. Okay, got you back in at 13. Where are you today? 18. Is this a good one to buy? Well, I would say they're printing. The 4-hour algorithm makes you as much as buy and hold, 120%. It wins 50% of the time. Your average win, 14%. You just had a 17% win. Then it gets you back in. And are you chasing this? Absolutely. Because this current run is up 36%. Let's take a look at a weekly. Because on a weekly chart, you just started this run. Now, where's the all-time high? Up here at 20s. So could you get back to that? Absolutely. Absolutely. Is it one that I would be running to buy? Nah. I mean, it's expensive. They have to get a lot of right, but their short interest is 13%. So it's a high short. Remember, HIMS is like, what? Let's see what HIMS was. HIMS is in a short squeeze. I think it's like 30%, 28%. But SoFi at 13%, that's pretty high. Now, what's Wall Street's price target for this one? It's $14. That's 20% downside. So am I chasing this one? Probably not. There might be better ones out there. We'll go over a little bit better one in a little bit, but one thing I want to bring up to you is another alpha pick. AppLovin. Shai says Polymarket has AppLovin as the leading contender to acquire TikTok's business. That's going to be huge. And if we go and look at AppLovin, we've had a recent dip. Remember the short reports? And I said, hey, it's probably a buying opportunity. It's not too late. The quant has it as a strong buy. The only thing against it was its valuation. It's expensive. But when you factor in growth, it's not. The PEG ratio is 0.8. Wall Street says it's worth $465. They haven't exactly brought their target way down with all of these short reports that have come in. They've kept it up there. I believe in this one. This one I like. And it's in midway in its 52-week range. I like it. Again, the short report that came out June 12th. Let's look at it in TrendSpider. You just had a buy at 346. You're trading at 350. What does the 4-hour algorithm do? It makes you 1,435%. You can see it right there. Buy and hold makes you 1,370. You win 65% of the time. I said during this short report, get out at 61%. Boy, that was 390. Now it gets you in here at 346 and you're trading at 350 and you don't want to buy it and they may get TikTok. That's a huge win. I like to trade. Probably be adding to it. Now, last week, after listening to The Compound, I talked about tokenization. And tokenization is a way of actually on the crypto blockchain, making stocks. This is how you're going to get it. And Robinhood is just doing things right. They launched the first ever private stock tokens for customers to access in the EU. What are the two private companies? SpaceX and OpenAI. You can't buy those here in the US. But they are launching tokenization. Okay? There are three things. Robinhood is giving EU customers greater access to US stock market by offering tokens for over 200 US stocks and ETFs. It's on Robinhood's platform. Vlad Tennant said our latest offerings lay the groundwork for crypto to become the backbone of the global financial system. Robinhood is being aggressive. And it's impressive. It is overly impressive. This stock, $40, April 11th. $40. You're at 93 right now. You've doubled your money in just a couple of months. They've got earnings coming up. They did three things. And currently in today's market, it's why didn't I buy this stock? That's the story. Why didn't I buy this stock? They have done everything right. They are super aggressive. Why didn't I buy this stock? That's where we're at today. It's back to all-time highs. Again, it IPO'd 2021. Boy, it opened at $35 and it went all the way to $85 that week. $85. You're trading at $93. During this entire time, you had the opportunity to buy this stock. By the way, I'm not yelling at you that you didn't, because I didn't. They're not in the S&P, so I don't have any ETF that actually owns this. I have no exposure. So like I said, this is currently in the why didn't I buy this stock category. And it should and probably will be added to the core portfolio at a very new time. Now, what does tokenization allow them to do? It allows them to expand outside the US and also do what they're currently doing, which is 24/7 trading. No other platform does that. Okay, JP Morgan, Fidelity, Schwab, all of those big banks, they are a long way from getting to 24/7 trading. Robinhood currently does it. It allows investments in non-public companies like SpaceX and OpenAI. You tokenize it. And they also announced today, it was a big announcement. They announced that they're allowing hodlers of crypto to import your crypto into Robinhood, and they will allow you to start staking. Imagine this is the interest payment. And sometimes it's a very big interest payment. So staking is a big deal. Again, we could be dealing with FTX style stuff, but they are legit. Again, remember, I didn't like Robinhood because their GameStop stuff. That's long in the past. Again, the management team is aggressive. They are figuring out how to do things around the regulatory statutes. Remember, when they offered, they wanted to offer sports betting, and the regulators said, no, you can't. They went predictive markets. And so that's the type of management you want. And when you have people growing up on this platform, where's when the parents of JP Morgan customers die and the kids take over, they're going to say, I want that Robinhood Gold card. And if you think it's just starting, no, it's not. Again, this article points out it will enable U.S. customers to automatically invest cash back from credit card purchases into digital assets this fall. So they're announcing things. And in after hours, it's up 3% more. It pumped 12% during today's session. It's still pumping. Hood is still pushing after hours. That's it. In the 15-minute chart, you can see it's still pumping. The $100 psychology level seems to be a magnet. Again, it's trading at 96 in after hours. $96 in after hours. $100 is 4% off, and more than likely, it will get there. Now, there's a sympathy trade brewing, and it's Webull. Let's look at Webull. Because is Webull a buy? Well, remember, Webull isn't covered by the quant. Seeking Alpha analysts hate this one. And you can read all about why they hate this one because they publish articles on it. So even though the quant doesn't cover it, you can read experts telling you what to do with this. Now, do I like this one? 5 days, it's up 5%. 1 month, it's kind of even. 52-week range, you're at the very bottom of this. Remember, this one pumped during its crazy IPO. It pumped to $79. $79. Is it worth it? I don't know. I mean, would I buy this one? Probably not. Do I promote Webull? Yes. I don't. My Robinhood account is 100% in VOO. But my Webull account I trade. That's where I bought QQQ today. That's where I bought it. 4-hour algorithm doesn't work. The 65-minute algorithm, it makes you 8%. So you can find a strategy that actually works. Maybe the 65-minute works, but the 4-hour one doesn't. So if that's within your realm, again, Webull, go over to the link tree right here and sign up for Webull down here. Sign up for Webull or Robinhood. You get free stocks when you sign up. I like it because it's in my small account, but am I investing in them? No. But understand, whatever Robinhood does, Webull does. Now, the thesis on Robinhood is not value proposition. It is not, because this is a leaders don't get discounted, but it's a strong buy in the quant. Again, it's the momentum, it's the growth, it's the profitability, but you're up there within your 52-week range at all-time highs. It's hard to buy, but I think you're going to $100. And just like I didn't want to buy Palantir, this is one of those that, good God, why didn't I buy it? Now, if you're looking for something other than IBIT, for Bitcoin. Okay? Here are 15 stocks that appear all in on Bitcoin. I talk about MicroStrategy a lot because I like trading that one. Why? The 4-hour algorithm works. Okay? The 4-hour algorithm wins 45% of the time, but its performance far outweighs even buy and hold. Your average win, 65%. This buy at $384, you're at $404 right now. It's a good buy. You can triple leverage or double leverage the ETF with MSTX. You can do that. It actually does better. 231% over the last 10 months. 231% on what? 13 trades? Your average win is 73%. It just got you in at 36. Where are you? 40. That's a nice 10% move just over a few days. But again, here's some other stocks that are holding a ton of Bitcoin. So as Bitcoin goes up, Tesla's in there. Mara Holdings, which is a miner. GameStop just started going there. So maybe this might be better than holding IBIT. Coinbase is starting to hold a bunch. And they have to hold a bunch because where's IBIT, all of IBIT's Bitcoin? It's in Coinbase. But I would argue that maybe, and Tom Lee may argue this one too, that ATGE, Ethereum. Tom Lee says Ethereum could be the next Bitcoin. And the only ETF that I know personally is ATGE. That's it. Go and do your research. There might be others. There probably are others. But the only one I know is ATGE. Now, Wolfie says SBET is a nice little leverage like MicroStrategy. But let's go see if we have a strategy that works for Ethereum. ATGE right here. Boy, the 4-hour algorithm just got you in at $20. Now, it doesn't work very well. But maybe with Tom Lee's pump ability, maybe this one starts going back up to the 30s. Again, go and ask Perplexity if there's other ETFs. Go and find it. Now, a trade that you may want to take, and I will show you why I'm not taking it, but Plug Power was up 28% yesterday based on the surprise extension of the clean hydrogen tax credits in the big, beautiful bill. That's it. You got Bloom Energy, you got Ballard Systems, you got Fuel Cell. You got a bunch of them that were up. Okay, that's based on this tax bill getting passed. Now, what I want to point out is over the last month, Plug Power is up 63%. It's crazy. I don't like this stock. I don't think it's worth anything. It's got a 20% short interest. So any movement in this stock up gets double and multiplied by a bunch. But what I want to show you is this a stock that you would buy? Because on a weekly, during a bull market, look at that. Do you want to buy this bounce right here to think that maybe it gets back up to $2 or $3? Maybe. For me, it's a no. So I think during a bull market, you want to trade stocks that are trending upwards or have some type of story. This one, to me, doesn't have a story that holds up. But maybe, we're all different. So maybe that's one you want to do. Now, I'm going to include the scans in the newsletter. Remember, subscribe to the newsletter right here at dailystockpick.substack.com or go to Linktree, and it's a link down there, and you're entered to win a year of TrendSpider. It's the best charting platform out there. And again, it's this tier with the advanced with 52 trainings per year. And one of the things I put in the newsletter was back in May for the paid newsletter subscribers. And to be entered to win, you don't need to be a paid subscriber. But one of them that I put in was a list of, hey, here's May buys. And so here are 3 stocks that today have a buy, another bullish move in the 4-hour algorithm. One is Cardinal Health. This is a former alpha pick that they sold. I held on to it. Why? Because I liked the story. My father owned this for a very long time. I liked this story. I knew about the stock. I liked the story. I believe they sold it sometime in April for 130. It's trading at 167. I like the story. We can go and look at Cardinal Health in Seeking Alpha, and it's a hold. And that was why it was. And it's the valuation and the growth. But again, I like the story. It's at all-time highs. But this wasn't at all-time highs in May. You can see in May, this was 150. 4-hour algorithm had you buy in here in April, 132. You got out with a nice 15% gain. Then it had you buy at 160 again. You're at 167. Just today, it had another pump up. Another sign that says it's going for another run. Now, Fresh. I brought this one up yesterday. Fresh was up like 1% yesterday. Not much. 1494 is the buy in the algorithm. 1491 is where it's trading right now. You've got earnings coming up end of July. End of July. When you look at a weekly on this one, we're not stretched. I like this one. I saw the CEO and I said, you know what? I like that one. And then another one that I said buy in May was HIMS. HIMS, it shot up here in May, but I said, you know what? You could play this one to get to that 63, and it did. Now, I sold at, I think, 55, somewhere around there, 52. It's going for another run. We just had another buy at 49.86. Where are you trading right now? 49.86. It gave you that buy. MACD, below the oscillator, about 2-3 points below the oscillator. It wasn't done going down the last time it was here. The last time it was here, it was trading at about 31. Got all the way down to 28. Maybe this one comes down and touches the 200-day of 43. Maybe that's your stop loss point. And you say in your journal, I only want to trade it, but if it gets to 43, I'm going to cut it loose because maybe it'll go down to 30. Maybe you double up and you say in your journal, hey, if it gets to 43, I'm going to buy more. Maybe you like this one. Okay, but again, those are 3 stocks that I scanned that list of stocks that I said to buy in May, and these 3 stocks came up as a buy today. Now, there are 2 leveraged ETFs that came up in the scan today. DRUP, this is disruptors. Okay, this one, the 4-hour algorithm over 31 months, it's 17 positions. So it's one every other month. DRUP is a Granite Shares, NASDAQ Select Disruptors. Go and look at the holdings. 4-hour algorithm had you buy in here at 49. You're at 61 right now. On a weekly chart, you're not extended. You get extended when you're about 2 points above. And you just passed the all-time high at 61. Is that 61 going to provide you support for the next leg up? Maybe. Maybe. Again, it's a disruptors ETF. And then you have the Chinese, yin and yang. Now, this is a decaying asset. Remember, it's a triple leveraged ETF. So it's always going to decay. But on the 4-hour algorithm, we have a buy here at 30. If China's going into a bear market and you're going to see the China market come down, this will go up. I like to buy the long one, which is yin and yang, YINN. And I brought up yin a couple of days ago because it has a buy. Both of these are a buy. You got to pick a direction. And one that is a spider sector that is underperforming the S&P. Go look at the quant rating before you buy this, okay? But the 4-hour algorithm has a buy here at 80. And if you just look at a weekly chart, it's not extended. It is significantly underperformed the market. This is Consumer Staples, XLP. Maybe that's one you want to buy. Again, that's the scan. So there you go. That's the podcast for today. I will be back on Wednesday morning. You guys have a great day. I will talk to you later. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.